Ladies and gentlemen, welcome back to the channel. We have some big news to share with you in today's episode. Look at Bitcoin. Bitcoin, upon this news, skyrocketed. Okay? I expect a similar reaction in stocks. Now, there's reason to believe this week could be explosive to the upside. And we'll talk about why that is in this video for markets and for Tesla stock specifically. Ladies and gentlemen, first things first, if you want to come win with us, come get involved in the trading community, check that link out down below in the description of this video. We are really just out there looking for the hidden gems, okay? We want the Palantirs at $10 kind of stocks, okay? And we're finding them. And again, the idea is you're not going to know about these companies that we're investing in. Most people, right? They are the under the radar hidden gems. They're not hypey yet. They're pre-hype stocks, okay? And that's the core strategy that we have been targeting. I've always really been early to stocks, so I understand some of these I'm early to, and that's the idea. That's where the money is ultimately made. So if you guys want to come join us, check that link out down below in the description of today's episode. But let's get into the breaking news coming out that is causing crypto to rally aggressively and is going to cause the markets to rally as well. Okay, so I was already very bullish on the markets this week and really over the next 3 months. So we'll talk about that a little bit in today's episode. But these are the headlines coming out. It says China and U.S. reach a trade consensus. China's Vice Minister of Commerce Li Chengjiang announced that China and the United States reached a consensus on key trade issues after candid and constructive talks in Kuala Lumpur. Discussions covered export controls, tariff suspensions, fentanyl-related measures, anti-drug cooperation, trade expansion, and U.S. Section 301 fees. Lee said both sides will now begin internal approval procedures. I think some of the key words here, tariff suspensions. Okay, so it sounds like that November 1st tariff is going to be canceled. Now, we obviously want to see what Trump says, you know, what the details are of this. I'm sure we're going to hear something over the next 24 hours or so that solidifies this a little bit more, but this looks like some kind of trade deal to me. Okay? And, well, just add that to all of the reasons to be bullish right now, and you have an even stronger, more compelling case to be long as hell in this market. Also in news, China will make a substantial purchase of U.S. soybeans, Treasury Secretary Scott Bessent said. Bessent says that the government shutdown is starting to eat into the muscle of the U.S. economy. Steve Bannon says Trump is going to get a third term and people ought to just get accommodated with that. I actually said this to my mom when we were talking about it. I said, look, I don't think Trump is building a $300 million ballroom to give it up to the next guy in 3 years. Okay? Things probably going to take 6 months to build, if not longer. You know, he's probably going to run a third term. And from a market's perspective, you just got to be used to the volatility. Like, whether it's, you know, 3 more years of Trump or 7 more years of Trump. There's going to be extreme volatility when Trump is president. Okay? And sometimes it's going to not look good. Sometimes it's going to look great. Things are going to change. You have to understand that, you know, it's just going to be volatile, and you got to stay the course. And you got to understand that deep down, Trump wants the U.S. to do well in AI. He wants the people to do well, okay? You have to believe any president wants the people to do well. He wants businesses to do well. He wants crypto to do well. Like, these are things you'd rather bet with him on, not bet against on. Okay, now let me tell you a little secret. Why stocks are about to do very well and head into at least a 3-month rally from here. Okay? It's actually a lot simpler than most people think. Okay? The VIX. The equal weight volatility is extreme right now. Okay? What does that mean? Well, Wall Street is very bearish on single stocks. They're nervous about single stocks. Okay? For an example, we used September 2nd in some of the prior videos. Take September 10th. The VIX EQ, which is the chart on screen right now, was on September 10th at 31.42. Okay? Today it's at 40.17. So it's up a lot from September 10th. Take the VIX for an example. Okay? On September 10th, the VIX was at 15.35. Today, it's at 16.37. It's up a little bit. It's up $1. Okay? The VIX EQ is up $9 since September 10th. There is a lot of fear out there in single stocks, and it's because of earnings this upcoming week. Now, we all know that hedge funds and institutions underperform the S&P, okay? Why that is, at the core of it, is because most hedge funds and institutions, whether they are run just with a computer, right? If the computer is doing buying and selling, or if humans are actually doing it, they all operate under one parameter: risk management. So the more stocks fall, the more hedge funds and institutions sell. Okay? And when they get nervous, when volatility goes up, they sell the riskiest stocks first. Hence why hedge funds and institutions are bearish right now, because the Fed this week, because of earnings, because of trade tensions with China, up until today, at least, because the government shutdown and uncertainty. The equal weight VIX is up a lot, like a ton. I mean, you are roughly like 50% as fearful, like 60% as fearful now as you were back on April 8th. Okay, on April 8th, the VIX, the equal weight VIX, was at 70. Today, it's at 40. You know, people are nervous around single stocks. I think a lot of this has to do with earnings, and people are nervous around AI guidance. But again, back to my point. Wall Street, as they are nervous, as volatility is higher in single stocks, they're hedging more. They're selling stocks. That's why hedge funds and institutions underperform. When things get a little dicey, they hit the sell button. Okay? When volatility comes down this week, after big tech earnings, you're going to see a vol collapse and a ton of buying pressure hit this market. Now, you outperform hedge funds and institutions. I outperform hedge funds and institutions because when more fear goes into markets, when stocks fall, we buy. Hedge funds and institutions, they don't do that. They wait for the coast is clear signal. Now, with the news we're getting in the headlines around China, you're getting a little bit of this coast is clear signal, but a lot of the fear, again, right now is correlated to earnings and AI CapEx guidance, and Wall Street is just nervous. But honestly, this is like the easiest bullish call I've made in a very long time. Like, this is equally as easy as when Trump said to buy stocks back in April. Like, markets were down 20%. Trump says, you know, don't worry about China, buy stocks. Like, it doesn't get simpler than that. But right now, it's almost equally as simple, okay? It's most people should be able to see what I'm saying and say, okay, that makes a lot of sense, okay? Now, we'll get back to this whole market rally thing in just a minute. Let's give you a rundown of the earnings, okay? So tomorrow morning, you have Keurig Dr. Pepper, Carter's, and some others. Wednesday and after hours, Celestica, Avis Budget Group, NXP, Rambus, Waste Management, Cadence, Whirlpool, Bed Bath & Beyond. Tuesday, pre-market, SoFi, United Health Group, PayPal, UPS, JetBlue, HSBC, Royal Caribbean, Wayfair. Obviously, SoFi, PayPal, some of the More fintechs are going to be important. How's the consumer doing? UPS is also another big one because that will give you a little bit of an insight how the consumer is doing as well. Now Tuesday and after hours, you have Enphase, Bloom Energy, Booking Holdings, Visa, Electronic Arts, Cheesecake Factory. Visa's a big one too. It's going to tell you, again, how the consumer is doing. And when we don't have economic data, earnings are the best thing that we can go off of. And honestly, I think earnings are always the best thing to go off of. I don't think the government numbers are very accurate at all. Okay? Earnings, though, what companies say is giving you an insight to how consumers are doing in real time. So I always pay more attention to earnings versus economic data, but markets typically don't. Okay? Markets typically like the BLS data more than earnings in regards to kind of judging and evaluating how the economy is doing. But right now, they're going to be forced to listen to company earnings, which in aggregate are going to be really good. Okay, only about 20% of the S&P has reported so far, but 84% of companies are beating. That is at the highest beat ratio almost ever. You've almost never had this many companies beating before. Now, Wednesday pre-market, Verizon, Boeing, CVS Health, Caterpillar, Fiserv, Centene, Etsy, Kraft Heinz, ADP, and Phillips 66. Wednesday and after hours, Meta, Microsoft, Alphabet, Chipotle, Carvana, ServiceNow, Mercado Libre, and Starbucks. Wednesday pre-market, Eli Lilly, Merck, Comcast, Blue Owl, Roblox, Advanced Auto Parts. Thursday and after hours, Amazon, Apple, Coinbase, Reddit, Western Digital, MicroStrategy, Rocket, Riot, Cloudflare, and Roku, and then some healthcare and oil companies on Friday. So obviously the big ones that are going to move the index, Meta, Microsoft, Google, Amazon, Apple, okay? But also the credit card companies, the fintechs, okay, some of the semiconductor related companies like NXP and Cadence, those are also going to be important as well. Let me tell you this, as we just talked about. Big tech earnings are going to be better than expected. They're going to raise AI CapEx budgets because why? They don't have a choice. Okay? Again, as I've said before, Nebius, CoreWeave, Applied Digital, all the other data center companies, they're trying to eat Amazon and Oracle and Microsoft's lunch. Okay, Microsoft, Amazon, Oracle, they have more of a legacy data center business. They are adding AI capabilities to that. Okay, so they're competing for new business in AI. And we see just how extensive the AI application is. I mean, there's 800 million daily active users of ChatGPT alone. That takes a lot of compute, not to mention the other large language models or the other, AI products and services coming to market. We are AI training compute right now, and we're going to be for years. There's 1% vacancy levels or rates in AI data center workloads. Okay, 1%. That means if you have 100 GPUs, 99 of them are rented out, and one of them is in flux, right? Not yet rented out, contract likely to be signed soon, okay? That is, it's a very good demand environment, okay? But again, all of these companies, they're fighting for relevance, right? There's new up-and-comers that are trying to take their market. So, let alone just, Microsoft trying to take Amazon's business or, like hyperscaler competition in and of themselves. There's the smaller guys coming in to eat their lunch as well. They have no choice but to spend on AI. Now, with Wall Street this nervous, with volatility in single stocks this elevated, again, the VIX EQ, what's going to happen after earnings is you are going to see volatility collapse. And hedge funds and institutions, when they see volatility collapse, it is going to trigger automatic buying. Okay? Because again, hedge funds and institutions, they don't buy when volatility goes up. They sell. Okay? Hence why a lot of risk-on areas of this market have sold off. When volatility goes up, hedge funds sell. Simple. When volatility falls, hedge funds buy. So after this week's earnings, they're going to start buying stocks again. And they're going to start buying the more risk-on names that have sold off in recent weeks. And that's why I'm positioning now for it. Now, we also have our big catalyst this week, which is Fed Jerome Powell. Okay? The Fed's going to cut rates this week. That is a certainty. The Fed is going to signal additional Fed rate cuts from here. Markets are pricing in a cut in December. They're also pricing in a cut in January. Okay? So we're looking at 3 rate cuts. 2 more after this Wednesday from here. Stocks are going to like that. But there's also likely to be an end to QT. So by this Friday, you're going to have the Fed confirming more rate cuts and likely an end to QT. You're going to have volatility collapse in single stocks. Both of these things are going to trigger massive buying pressure in stocks. Okay? And the risk on areas where you and I might be investing our money, high risk, high reward kind of stocks, looking to find the hidden gems like we are in the trading community, those are the areas that are going to go up the most. Okay? It's simple. So by this Friday, I'm expecting a massive upside move in markets. Okay? Not to mention the fact that the US and China seem to have come to some kind of trade agreement that just amplifies things even more. That wasn't necessarily a part of my bull thesis yesterday. But add that to it, and the situation looks even better. Now, I also reported yesterday that Canada stopped running their Ronald Reagan tariff ads, which is the whole reason why Trump canceled trade talks with Canada. So I'm expecting in the next 12 to 24 hours, we're also going to get a headline that Canada and the U.S. have resumed trade negotiations. Okay? That's going to be very bullish as well. Now, add to it, over the last 10 weeks of any given year, the S&P on average goes up 4%. Well, considering we have all of these obstacles that we are, knocking down and, going to get past, like the volatility in single stocks, right? Vol collapse, Fed Jerome Powell, rate cuts, trade deals with China. We'll see if the government reopens or not. That's a little bit of a wild card. But if you, on average, return 4% in the last 10 weeks of the year, with all of those positive catalysts, you could be looking at something much larger than that. Tom Lee has said maybe 10%, maybe more than that. Because, again, even furthermore, here's 8 reasons why I'm bullish on stocks into next year. Okay? AI is alive and well. We're going to hear that this week with earnings. That's massive upside catalyst. Earnings generally over the next 12 months are strong with upside likely. Okay? Stocks tend to follow earnings historically. As earnings go up, stocks go up. And that's going to be the case this week. And estimates are likely to go up as well. Now, consumer strengthening with the big beautiful bill in real estate. A lot of people overestimate real estate, but there's a lot of equity out there. I did some recent math that says if you had 5 million homes sold in this country next year with an average equity realized gain at about $150,000, that would be over $700 billion of additional cash that consumers would have to spend or invest. That's what they do. They're going to spend or invest it. Probably 50-50. Okay? Probably 50% of that's going to get spent, 50% is going to get invested. Okay? Either way you want to look at it, that's good for stocks. Now, Fed rate cuts, again, we're looking at 3 cuts in the next 3 months-ish. Trump cutting red tape, we'll see if that happens or how long that takes to show up. Clarity on trade. We just got a little bit of that with China. A new bullish Fed chair coming in early next year, and inflation that continues to come down. Add some of the short-term signals that I've talked about in this video with more of the longer-term thesis for 2026, and you are setting up for one of the most aggressive upside moves you have seen ever before. Okay? The next 3 months, some of you guys have never witnessed a market that's going to be this aggressive to the upside. Okay, I want you guys to be prepared for this, because how you react could make the difference in making a lot of money or not making much at all. Because I know a lot of retail investors are fearful right now. They're scared. They're letting the emotions get the best of them. And really, you just got to look at the facts. And the facts are, hedge funds and institutions, they sell when volatility is high. Volatility is sky high right now in single stocks. You wouldn't know that if you looked at the VIX itself. But volatility is sky high in single stocks. Heading into the biggest week of earnings, which earnings, they're going to be good. AI is going to be good. There's no reason to expect there's going to be some kind of disaster. So volatility is going to collapse after earnings, after we get that certainty of good news. What's going to happen? Hedge funds and institutions, their algorithms are going to kick in. They're going to start buying stocks. And they're going to start buying the more risk-on areas that have been the first to really have gotten sold in the past couple of weeks. Okay? We're going to be getting a Fed rate cut this week, with projections of multiple more cuts over the next couple of months. Potentially Jerome Powell ending QT. It looks like we just got a trade deal done with China. This is setting up to be one of the easiest rally calls I've made ever. Like, the writing is on the wall. And I think for Tesla specifically, we're really at an interesting moment, because between now and November 6th, I'm not expecting too much of a rally. And I know it sounds crazy, but I think Tesla could hit like $500 before November 6th, right? Which is quite a bit of upside from here. From current levels, for Tesla to hit $500 is about 15.5% upside. So like, that's not nothing, but it's not like a double from here, right? So that's roughly over the next 2 weeks or so. Now, I think after November 6th, once Elon's compensation package gets approved, that's when Tesla could make a move into the 600s, okay? That's when you could see the 30 to 50% upside. And again, just before November 6th, it's hard for me to imagine Tesla has a crazy rally, just because, simply put, there's going to be people that are nervous if Elon's compensation package does not get approved, that he would leave Tesla. Now, there's probably an 80-90% chance the package does win and get approved, and shareholders approve it in the voting process. But that 10-20% chance it doesn't, would be a massive blow to Tesla's stock. To lose Elon as CEO, the stock would fall like 50%. I think the board and Elon would figure out some other way to get him voting power. There'd be a new vote, new package, something like that. But the initial reaction on Wall Street would be, oh crap, is Elon now going to leave Tesla? So just that nervousness alone heading into November 6th is going to keep a lid on the stock. But after November 6th, assuming the vote does get approved, the stock will go absolutely parabolic. So let me know your thoughts on all of this down below in the comment section. Hit the like button, as well as subscribe to the channel. Come join us in the trading community. Come on, this is going to be one of the best 3-month periods, with some of the most opportunity we have seen ever before. And the trading community is the place to be. Check that link out down below if you have not done so already. Get yourself $100 in your choice of free stock when you sign up with Public and fund your account with at least $1,000. It is free money. $100. I look at like every $100 invested today as 1,000 10 years from now, minimum. Okay, so get yourself that free money. With that said, ladies and gentlemen, enjoy your Sunday, and I will see you in the next one.